Hello and welcome to the latest London South East Greatland Gold live webinar. We're joined today by the Greatland Gold MD, Shaun. And once again, many hundreds of you are listening in live and ready to ask questions. For those of you who don't know me, I'm Donald Leggett, Head of Investor Relations at London South East, and I'm your host for this event. This morning, we saw the long-awaited announcement from Greatland that the 5% share stake in Havieron has been priced by an adjudicator at $60 million US. Under the rules of the joint venture previously agreed by previous management from Shaun, the adjudicator had two options: to choose the price put forward by Greatland or the lower one put forward by Newcrest. And no doubt with both options backed up by mountains of detailed evidence. It's worth noting that in that RNS this morning, Shaun is at pains to point out that this price does not reflect what he feels is the true value of Havieron. So the plan for today is that Shaun will talk to slides for as long as he wishes, possibly around 15 minutes, with the rest of the hour allocated to questions. And I'll be taking those questions more or less in date order. So please do keep sending those questions to us now. We've got lots already, but lots more to come, no doubt. And don't forget to give us your real name and keep them short and friendly. Okay, without more ado, let's cross over to Shaun. Was that the result you were looking for, Shaun?
Look, yeah, Donald, it was, I think from the process, I think I've always talked about people should have the confidence that the present team is working in the interest of all shareholders to make the most of this opportunity. And I think in that sense, it was the most what we were looking for. So look, Donald, thanks again for having me on the program again so soon. We caught up last week and went through the presentation. But this is really the presentation I wanted to give. So today, although we have a full deck of slides here, I think what we'll do is just work through the new 4 or 5 slides. Try to do that in relatively short order because I know I enjoy, and I think the people participating in this program really enjoyed that Q&A session. So with no further ado, let me just quickly walk through the new slides in this deck. I will pause for 30 seconds because I always do love to orientate around our strategy. I think we have a very clear vision of where we're headed with Greatland, and that's around our 3 pillars of delivering an expanded Havieron, investing in the drill bit to create option value and have the next discovery, and then finally, a disciplined approach to future acquisition. With that, what I'd like to do on this slide is really just give a bit of a brief overview. And for those who have kind of followed me in the past, I've always talked about solving the transition issues in my first 18 months at Greatland. And this was an incredibly important transition issue to resolve. And with this, what we're able to achieve was the milestone for this option being initiated in terms of the price was effectively gated on that pre-feasibility study that came out in October. So 2 months after that in December. And I think I'd always kind of tried to be open with people that would be the starting point of those discussions. And what we were able to achieve was a 5-fold increase. So in those 64 days, from release of the PFS to today, we improved the value of Havieron by $1 billion. An outstanding outcome, and it was built up from first principles with the updated resource and reserve, which had increased 50%, and that delivered this uplift in such short order, and I think shows us the trajectory of Havieron. And so when I think about this, I think about in March 2019 when Greatland entered that farm in and a much less understanding of the Havieron ore body. What we had on a 100% basis around about a $93 million whole of Havieron value. Walking forward to the PFS in late 2021, we had a valuation of 228 million. Then, although we're announcing it today with a date, we valued it at the date that the option pricing mechanism was triggered on the 15th of December. We achieved this stunning transformation to 1.2 billion. And that's 12.9 times in that kind of ballpark 2 years from the farm-in. But it's fivefold, it's over fivefold from that pre-feasibility study. And of course, I've mentioned that trajectory that we have. We are in the fast-paced growth of Havieron. We're still going to expand the Southeast Crescent. We're still yet to really fully form and discuss and understand that block caving potential. And of course, we continue to benefit from exploration success. And as it happens, our announcements were a bit like buses. You wait a long time, then two come at once. We also announced our 6-weekly exploration update. And without digressing too much into that, you continue to see the asset deliver. The Southeast Crescent continues to tick over like a Swiss watch. The Northern Breccia had some great hits, but that Eastern Breccia was the new story for me. Bigger to the than we understood before. We've stepped it out to the north and more high-grade intercepts. So that's becoming a good grade, a high-grade zonation for us. So as we walk into the building blocks of how we achieve this outcome, it was around that March release of our updated resource and reserve. And what we achieved there was a 53% increase in the resource, a 50% increase in the reserves. And we delivered 6.5 million ounces gold equivalent. 2.9 million ounces of that was in a reserve. So effectively it was structured around a mine plan that we could demonstrate. And that growth has been 43% compound annual growth since that release of the maiden resource in late 2020. So, and that is really testament that this is in this high growth phase. And if we continue to see results like we have, remember, this is cut off as of December. And over the last 9 months, we've continued to see tremendous exploration results. So there should be confidence out there that this continues to grow this system. As we deliver the growth drilling, we understand it more, we define it more, and we can delineate the outcome more. We remain in this rapid growth zone. So although we are pleased that the value uplift is $1 billion, and you know that should be, you know, right at the top end of expectations. You know, it's anchored around that PFS view, and by bringing out that updated resource and reserve, we shifted the paradigm. We demonstrated the more value, because that is the building blocks of understanding value. Understanding the resource, understanding the mine plan are the building blocks upon which you understand a mine. And so that was a courageous decision by the team to decide to come out and unilaterally bring out that updated resource and reserve, but essential to try to optimize this outcome within the structure that we had and to protect the interest of shareholders. And that's what I'd undertaken to do, that we would do the time, energy, and effort to present this the best way we could. But what we were trying to do is get that outcome within the confines of the agreement. So this today sets a price, not a value for the asset. The joint venture agreement doesn't represent true market value in the opinion of the board. And this very much is anchored off the back of that mechanism. It's a highly prescriptive process, and particularly the binary nature of the outcome. If the if you were appointing an independent valuer and one party, say, puts in the lowest bid and one party puts in the highest bid they can imagine, that independent person can come out with a compromise based on their value. And anyone who's had their house valued as opposed to a real estate opinion on it probably understands that's inherently a conservative approach, because it's about not what you know, but what you can prove. But within this process, you had to choose one or the other. Now, I've spent 18 months thinking about the game theory of that. And really, if the other party sticks to a normal process and puts in a modest view on value, you really cannot put at the top of the value. And remember, Newcrest are a very credible organisation with a good brand. They are the manager of the asset. They have access to the information, and they are the author of an incredibly impressive 350 odd page, very detailed and high quality pre-feasibility study. So those incumbent advantages were really substantial for us to have to address, and that impacts the way we approach this. Because what we wanted to do is make sure that we could find the point where we could be successful in this endeavour and demonstrate the value growth of the asset. And I think it's also worth mentioning, because I've said that the board doesn't feel this represents full value. We actually look to say, well, let's step outside the J. Here is an offer. If our joint venture partner thinks it's worth less than this, well, we will pay you considerably more for this. And I think that reflects the conviction that today is not what we regard as a true value, market value. We would have been delighted to have transacted and acquired some of Newcrest stake for a much higher price. And I think, had we been successful in doing that, I still think it would have been absolutely compelling value for us. We didn't put in the highest number we thought. We actually put in a value where we thought it was still compelling, but substantially higher than their position, and our own for that matter. And although I want to move on to the Q&A, I do just want to wrap up around the process, because previously I've identified and talked about that people should have confidence in our approach, but now I can probably just touch on that briefly. So we came out with the updated resource. We had Stuart Masters, who actually sits on the JORC committee, co-sign that off as competent person. We had SRK Consulting come in and endorse as a second peer review. In terms of the reserves, a similar process where we had NTEC come in and revisit the optimizations of that mine plan, had SRK come in, endorse, and again, it was second peer review. That information could then be fed into SRK to think about an overall technical report, overall understanding of the exploration opportunity. This information could be fed into PwC for a very structured and comprehensive approach to a formal valuation built up on supported data, overlaying that with a corporate advisor to make sure we understood it commercially. And then we used another group, which included Nev Power, some of you might know was head of $50 billion Fortescue, to come in and help quarterback that with me in terms of making sure we thought through the technical and commercial overlay. This was an incredibly thorough process. And one of the great things that this process really forced us to do was it expedited our cycle time for understanding our own asset. And I think we feel really confident that we have a very comprehensive understanding and that we're able to convey that to be successful in a process. So with that, Donald, hopefully that was a really good overview and walk you through that new part of the slide deck. But very happy to now engage with the Q&A discussion.
Shaun, I think what you've just done is whet everybody's appetite They're all sitting there going, oh my God. That was an extraordinary story you've just told, Shaun. Wait, none of us have heard this before, so that was quite a thing.
Look, I think it is a really unique scenario, and certainly none of the group that we had working with us on this had ever seen a structure like this before. So I think the way I articulate it is our obligation coming in was to make the best of these circumstances. And I like to think,
do you feel as though you have made the best of those slightly awkward circumstances?
yeah, look, I really do. We're really proud of the work we've done. Couldn't be prouder of the team. We had a great relationship with the team I described that came in. I think they all kind of celebrated a little bit with in terms of achieving the outcome that we had advocated for. But you know, there is, you know, to be open, there is, I've got to be measured the way I say this, but there is some melancholy in terms of setting a price where we don't actually feel that's what we could achieve at a full market price. It's a good outcome, but you know, this is an absolute prize asset. So unfortunately, you know, I don't think I'm lucky enough that Newcrest won't exercise this option, notwithstanding such a terrific, you know, multiple of how they've previously described value. But I think, you know, it's such a high quality asset. I have such conviction about its future that, you know, fundamentally it's a shame to see any of it go. And it's a shame to see any of it go at a value that we think, you know, we would buy it ourselves at.
Okay, so let's open it up to questions from the audience. Dipsard and James Phipps have both more or less asked the same questions, so let me conflate them. Shaun, tremendous effort by the team with the GGP MRE and all of the related work around the option exercise, and that's a fairly common theme. People are pretty pleased with the effort. Could you please share the outlook and timeframe for funding options around Newcrest, both either taking up the option or electing not to?
So they have a 30-day exercise period. So during that time, they will inform us of the outcome. So, you know, we expect to understand that in due course. I have asked the question, but they haven't committed one way or the other at this stage, which is their right. And then there is a period of some months after that before financial completion. So we'll work with them around that, but I imagine once they've made their mind, they'd probably want to rip the Band-Aid off, so to speak, and you know, complete in short order.
Okay, Nick Taylor asks, firstly, as a long-term shareholder in Greatland Gold, I'd like to congratulate you, Shaun, and the team for the excellent way that you've handled all the legacy issues. And it doesn't just mean this; it means that, you know, the previous announcement, you've managed to sort things out very, you know, within your 18-month time frame, as you put it. My question is, can you please? Nick's question is, can you please clarify the current position on the original option that Newcrest Mining has in a first right of refusal over our 100% owned Scallywag tenement? Thank you.
Yeah, look, that first right of refusal is if we went to, as I understand it, is only when we went to divest that asset. That is not our intent. It's a core asset. It's a long strike from Havieron. It sits to the northwest. That is you know, those structures through the Patterson run in a northwest trajectory. It's on strike. I think that's some of the, you know, as a general rule, the best place to look for gold and copper is where it's already been found. To be on strike along from that, I think that's, you know, one of the best addresses in the Patterson. We have a significant number of targets there, an ongoing drilling program. So your expectation is we would not contemplate divesting it. I see that as core. And the number one thing I'd like to do is unlock the option value in that tenement for our shareholders by tagging the next ore body. And whether that's another Havieron, you know, that's, you know, hitting it to the moon. But even if it's a half or a quarter of a Havieron, that's still a tremendous find, particularly when it sits next to existing infrastructure. That lowers the hurdle for economic return. So it's a fantastic address. It's a great place postcard to do exploration on. And for all intents and purposes, we have 100% of that asset.
Okay. I think this is a natural place for me to interject and ask you about the relationship with Newcrest going forwards. Is it possible for you to summarise what your feelings are, given you've gone through this process with Newcrest? Where does it leave you going forwards?
Yeah, look, I think we probably try to go to some lengths in the RNS to talk about the strengths of having Newcrest as a relationship, and the strength of the relationship that we have with them. I think at an operational level, that's outstanding. We hugely respect their capability up there in the Paterson, covering both their Telfer and the Havieron JV team. From an exploration point of view, they are absolutely outstanding. We work together collaboratively, marvelously well. I think in the past I've talked about some of their interpretations, such as following the dolerite structure and identifying additional breccia zones, is something that our team probably put less weight on. The drilling proved that to be a great idea, but two heads are better than one. I think we've contributed some strong ideas as well. So I think it's a lovely relationship in that regard. With Jury, I've talked about we're still the manager. And again, that's a reflection that we cooperate, we work together. I think we have a very strong and capable team ourselves. We have a very technical first principles approach to exploration. And finally, we also put a lot of sense in the dollar into the ground. We're very efficient. We want to spend our exploration on drilling. At the more corporate level with Sandeep, I like to think that's a really strong relationship as well. We talk regularly. The relationship is warm. Certainly, he's someone I respect and respect the capability of their organisation. So I think operationally and at the most senior level, we enjoy a really strong relationship. And maybe to expand and be more open, I've talked perhaps before about, in a general sense, I think when you enter a contract with someone, and especially a partnership, and partnerships need work and activity to keep them strong, and we put effort into that. But I think it's never necessarily wise to put in something which is a win-lose type scenario, where you do have different motivations. And I think putting this behind us, in terms of this now being resolved, creates really good alignment going forward. I think it's really positive. I think testament to the relationships that maintained a good relationship through this period. But I think we have even a better platform together moving forward.
Okay, David Woodward asks a related question. Assuming that relations with Newcrest are still extremely good, up to and beyond planned production, would you agree that although you're the junior partner in the JV, that JGP are now a driving force in the future development of Havieron?
Well, look, that's a lovely, lovely question. The relationship is strong, and it's we think it's a multi-decade relationship. So, it's important for us to value that relationship just like Newcrest does. Look, I want to be measured here. Newcrest is an incredibly capable organisation that we respect. In terms of us, bringing out our own resource and reserve, which is effectively a mine plan, and effectively, an update of that PFS. I think will be interesting to see whether the Newcrest does announce its resource, how that compares to the technical work our team does. So I wouldn't say driving force, but I'd like to think of it in terms of joint venture and partnership. Two heads are better than one. I think we benefit greatly from Newcrest being there. If Newcrest wasn't there, to have 8 or 7 rigs currently spinning at site, to have started the decline well in advance of studies, to have access to that infrastructure, access to the people and the resources, the smooth passage through First Nations engagement, environmental. They bring a wealth of organisational capacity. And although I think we've done a tremendous job at building our own organisational capacity, and I've talked about augmenting exploration, adding resource geology, mining, processing, legal and commercial, and being more rounded, being better placed to understand, be able to articulate the value of Havieron and being a good owner of Havieron. Newcrest is still a global major. And despite how proud we are and how motivated and engaged our team is, Newcrest also has marvelous capabilities, and we respect and acknowledge that.
Okay. Keith Atherton, this may come as a bit of a shock, this question. Do you think Havieron will be brought out?
Well, it's a world-class asset. Large companies want world-class assets with multi-decade production profiles. So I think the way I think about it isn't creating value, is that the best way to create short-term value is to focus on creating medium to long-term value. So we operate this asset to create long-term value for our shareholders, to operate it well, to understand it and deliver its full potential. I think we are presently on a tremendous growth curve at Havieron. In the next 18 months, we go into production. Say 18 months after that, you're producing 300,000 to 400,000 ounces per annum, and the cash flow associated with that. That's a tremendous milestone. Perhaps around that time, you're starting to articulate a scoping or pre-feasibility study around a bulk mining methodology, perhaps centered on that, the good grades we're seeing in that eastern breccia. I think that's another huge milestone in value. So over the next 2 to 3 years, I think we're on this wonderful growth curve in terms of continuing to understand and better understand the size and opportunity at Havieron, and demonstrating and de-risking that. And all of that should propel us along the value curve. So I think there's always risk, but I also think we have a shareholder base that wants to share that vision. And when I go and talk to institutional shareholders, I'm having the same conversation as today. What I'm talking about is having shareholders that share that vision, create long-term value, but also see that immediate trajectory over the next, say, 2 to 3 years. And I think that's important. There is risk. I think there is asymmetrical risk in our share price. If I and our team and the Greatland team are not successful at advocating and communicating and demonstrating the value of Havieron and our overall portfolio, and continuing to build the share price and the value of our company in line with the bigger, larger, better understood and de-risked Havieron, at some point, some party will decide that's a compelling value opposition. So, the focus is on me as the incumbent, is to make sure we successfully can keep up our value with that growth in the value trajectory at Havieron.
Okay, Chris Kirk asks, can you tell us how much we've drawn down on the Newcrest loan? I would like to know how much of the 60 million, 5% option million will be left and what it will be used for.
So within that, as I understand the JV agreement, Newcrest would have a right to prioritise repayment of that facility. Accordingly, it would be a largely kind of cashless transaction. That facility size is 50 million. If that was fully repaid, presumably there's around $10 million left over. So that is potentially a likely scenario. Again, this is all prefaced on whether or not they exercise that option, but that would make us debt free. So we're kind of 18 months away from production. and we are debt free. We already are communicating with banks. We have a relatively limited Capex profile to achieve production. But again, I think when we talk about the conclusion of this transition period, that's the final resolution. Is the option being exercised? What happens with those funds? What is our new funding location? So I think it's all extremely positive. But I think we're still interested to see how this process concludes, because all we determined today was the price of that option, and we determined that price was a substantial multiple of that original PFS study.
Okay, so Chris's next question also just flows on. How far off are we to announcing bank financing for our share of 70 million, for the Capex? And you alluded to that there.
Yeah, good question, Chris. Well, look, we continue to engage with banks. I think typically people would understand that you don't bank pre-feasibility studies. You bank the bankable feasibility study, the feasibility study itself. I think in our case that might be particularly the case, because remember, our PFS isn't an approximation of the final feasibility study. We've actually taken a 2 million tonne PFS and we've recommended a 3 million tonne study into the feasibility study. So you are going to see that 50% bigger, which obviously does have some impact on the cash flows and the production profile you're forecasting. Offsetting that, this is a pretty special opportunity. Here we are with a world-class ore body, tier 1 jurisdiction, next to existing infrastructure, with a global major as a partner. Now, that perhaps gives us the opportunity to outperform there. But I would always recommend, and if someone asked me when you can fund a project, I'd talk about it at the time after release of the feasibility study. But equally, we have a lot of interest now, and we continue to pursue and understand it and seek to optimize the outcome for our shareholders.
Okay, let's get back into production once again with Tibor Zolnoki, with apologies if I've mispronounced your surname. What's the current vertical depth of the decline? How much further vertical depth is it required to reach the top of the ore body? And how soon will that ore body commence mining?
Yeah, look, so I think the update in today's exploration, it was effectively a quarterly update, also gave an update on the decline. The acceleration on that decline I thought was tremendous. You saw since the last update, we've averaged just under 3.5 meters a day, which is a complete shift in productivity. And this is all consistent with what the expectation has always been, what we've talked about from day one. That Permian layer from surface is not homogeneous. With debt, it's a more consolidated material. As you get through that first kind of 50 vertical meters, you get away from that really soft material, you get away from the paleo channels, and you can drive your productivity. And I think there's an opportunity to continue to improve. In terms of when we see the decline coming to fruition, we talk about first production in early calendar 2024. So, ballpark 18 months away. We're moving very steadily. Although we're also measured in the language, we continue to have a soft Permian zone better, but we continue to be measuring those forecasts. But certainly being able to now observe the acceleration of efficiency and progress in the decline, I think gives everyone a lot of confidence.
So how much further vertical depth is it required to reach the top of the ore body? He does ask a very specific question there.
Yeah, so you're looking at around 325 kind of meters in vertical development still to go. But again, you have that ongoing kind of acceleration, and clearly, if you look back, till up to that March quarter, there were some modest, development advances. I think the team's done a good job there at turning that around, and now they've got their skates on, so to speak.
Okay, next questions. I'm going to conflate two questions here. Stuart Wolstenholme and Dip Sard, they both ask questions about the development ore. So how will development ore pre-full production be treated? Will this be on a 75-25% basis, says Stuart? And Dip says, can you please discuss development ore versus production ore as the decline proceeds towards the ore body? And how might this play a part in the pre-production aspects of Havieron?
Okay. Well, firstly, I'm still in the 30-70 paradigm, but clearly today really sharpens our attention on it perhaps being a 25% share. But so when you think about development, or I think just to be very clear, that Permian layer is barren. There is no development ore through that period, so you're not going to have a 2-year runway of development ore or anything like that. Once you're into the country rock, then you get into ore in short order. The infrastructure sits outside of the ore body, but you drive in relatively quickly. In terms of that development ore, as you work up your development drives, that ore is also would be on the same proportion as the joint venture. I'm going to answer the question as 30-70. So it would continue to be on that economic value.
Okay, now I'm going to ask you, hold on to your hat, Shaun. I'm going to ask you a difficult one. I think we should respect the shareholders' point of view on this, and that some of them think that all is not so well with NCM, and Nathan Rumble is in that camp. And Nathan says, is NCM in any way, shape or form hindering Greatland's growth expectations? As multiple shareholders are voicing major concerns about NCM, their past responses or lack of reassurance for shareholders is key right now. So it's back to that relationship with NCM. Is all well?
Well, look, the relationship is all well, to coin your phrase. And look, in sympathy for Newcrest, it's our obligation to look after our shareholders, not Newcrest's obligation. We try to do that. I've talked about developing the platform, resolving the transition issues, having the capability to be good owners of Havieron and be able to articulate its value, and making occasionally the tough decisions and going to our joint venture partner and saying, we feel it's in the interest of our shareholders to update this resource and reserve. And we did that cooperatively. We shared it with them ahead of announcement. People might recall they made a brief statement when that came out, but it wasn't unduly unhelpful. I thought it was constructive, and the conversations leading to that were constructive. So, of course, this is where I think it's a nice milestone to get past this, because by doing it, I think it's always good to feel the alignment. I'd like to think, really we just want what's best for Havieron, and that should deliver the best outcome for our collective shareholders. But the other lovely thing here is our shareholders have more exposure to the upside of Havieron. So as we commit additional drills, and again, I think having the support of a global major accelerates all that. It's our shareholders that disproportionately benefit from the growth of Havieron, from its rapid expedited pathway to production. So I think there's a lot of benefits there, and really you should look no further than this call and to my colleagues at Greatland in terms of who has a responsibility to look after our shareholders' interest.
Okay. You may or may not want to have a go at this, but Nitesh Patel asks, what is GGP's valuations at market value from this process? So in other words, you've just put out a big shiny new number into the marketplace. Extrapolate from there, and what do you think your market valuation might be? Or as you've said, you don't particularly think that the 60 million is fair market value, and in which case, what would new and enlarged number be?
Yeah, look, I think you've always got to be a little bit cautious at giving, share price kind of predictions or targets. But I think I might speak about this more about the trajectory of growth. I think what we achieved in today's announcement was demonstrated the growth. We demonstrated that this is in a high growth period of its development. And when I think about it, and I've kind of commented on this before, so I'll be brief, but as we take this into production, as we see the cash flow from a 300,000 to 400,000 ounce per annum de-risked sub-level open stope down that southeast crescent, I think that is a de-risking event. As we understand and we can define and articulate the bulk mining areas and be more specific and demonstrate a pathway to production, I think, again, that's a value uplift. So I'll more talk about it in milestones, and I think there are a number of milestones ahead of us. The value is not just what we understand and what we have delineated as resource and reserves at the southeast crescent to date. We have a high conviction that continues to grow. We have a high conviction that there will be an opportunity to mine that eastern and northern breccia in due course. And there's multiple ways you can tackle it. You can have block caves. You can have sub-level caves, which Newcrest use at the Telfer mine next door. That's a top-down mining methodology. Or you could do something more like a Sunrise Dam development, where they drive in off their decline and take out the highest grade elements of it. So there's multiple ways to unlock value from those areas. But I think possibly the bulk mine suits this a lot because we have that installed infrastructure. We benefit from Telfer, this huge gold processing plant, 20 million tonnes per annum. And the 10 million tonne Train B is intended to be dedicated to Havieron from first ore in 2024. We'll be using, subject to the feasibility study, say 3 million tonnes of that. So there's 6 to 9 million tonnes available from a bulk mine that can be put through existing infrastructure. So normally when you're trying to optimize a mine, you want low mining costs, you want to take a lot of the ounces, but the more bulk you make, the greater your Capex, the bigger the mill you've got to build, and the higher your funding hurdle. When you don't have that, it does change the way you think about optimization and perhaps lends itself to a larger mine. But that's all subject to, in due course, defining and delineating the exploration and and potentially in due course a resource, and then being able to potentially put a mine plan around that. But we like what we see. We like the trajectory.
Okay, you didn't just put out a 5% valuation announcement this morning. You put out some excellent drill results as well, which you phrased as a sort of a quarterly update in some respects. Dipsard says, excellent drill results as always, and perhaps being overlooked due to the option exercise outcome. What are your thoughts on the latest results in terms of prospects such as grade, resource growth, in terms of different zonations and dimensions, depths of the ore body, etc.?
Yeah, look, I think I said before, it's a little bit like buses. I was a bit disappointed of all the days that the announcement happened at the same time as that update, because you don't want that to be overlooked. It's a good and important and positive, or another positive exploration update. The southeast crescent just continues to give, but for me, again, I think that eastern breccia stole the show a little bit, just because of the seeing it step out to the north, seeing more high grade is really positive. So yeah, a little bit disappointing that they came out on the same day, but it's still an excellent result, and continues to demonstrate that ongoing growth. And the resource that we provided in March had a early December drill cutoff date. So really, there's actually, what are we now, over 7 months drill data that you've seen that has come out since then? So that you have some feel as to that ongoing and positive trajectory.
And the Eastern Breccia, talk us, just give us more information about the Eastern Breccia and your hopes for it.
Well, look, I think the hopes is it sits potentially really neatly as a first bulk mine. It sits a little bit lower than a Northern Breccia. If you do a block cave, that's a bottom-up mining methodology. It starts to seeing a reasonably consistent higher grade than you see in the Northern Breccia. Nothing wrong with the Northern Breccia, but just like the Southeast Crescent is higher grade, perhaps the Eastern Breccia is trending that way as well. So again, that's another reason to prioritize it. And then thirdly, it sits away from it. So you can mine that area in conjunction with mining through the top half of that Southeast Crescent as a sloss mining. So I think for a number of reasons, if you ask me, what my hopes and, the opportunity there, it would be, a first bulk mining zonation. I think the other thing is not to lose sight of is those high grade intercepts down the southern end. That's a target for us. High grade areas are tremendous. They generate, a high volume of free cash flow because you move the same amount of rock for more gold, and that they can be great for quick and short repayments of Capex and also for making broader areas economic. So I think high grade zones, again, attract the drill bit. And there's also the gap zone between Havieron proper and into that Eastern Breccia that needs to be drilled. And again, that's a great place to be putting some drill holes into to open up a new zonation. So look, there's lots to like in that part of the ore body.
Okay, let's turn to green metals. I know that when you spoke at the town hall meeting, one, you said you loved Havieron because it was gold copper. All the world's greatest gold mines are gold copper. You also said you loved diversity because that gives you a stable base to the business. See, I was listening, Shaun. I was listening. Paddy Gall picks up on that point in a lateral sense when he says that Damien was discussing the base metal opportunities at Havieron in his presentation in Perth yesterday. Can you add any colour, or do we need to wait for Newcrest to break the news?
Donald, you've answered the question so well. You haven't left me
oh no
much places to go. Like
Sorry.
the copper is it is tremendous. It's say 20% of the ore body, and it is the best gold mines have copper credits. In terms of the base, I think that does capture the imagination of the geologist. We love the fact that we have 20% copper, which is a base metal, and we want to understand what other opportunities there are around base metals. One of the interesting things about the cycle we've just been through, and I think people have heard me articulate a lot. We tried to do a very thorough, and this is 9 months of work. We took our obligations here seriously. It's accelerated our understanding cycle. It's accelerated the cycle time for us to process data, for us to then take that data and update a resource, to put exploration understanding and have targets in mind and delineate zones, the cycle time to understand how that would feed into a mine plan. So I think it's really accelerated our learning curve around the asset. That is to our enduring benefit. So the effort of the last 9 months isn't just around the outcome today. I think it's also around our knowledge. And although a lot of that knowledge and the understandings that were all part of a negotiation and an advocacy process, I think with that now behind us, I think it gives us the opportunity to think about how we can communicate that to the shareholders, to help explain why we saw this, billion-dollar uplift in value based on the data that existed kind of back in December. So I think that's very much of interest, and we don't necessarily have to wait for Newcrest to decide to move there, just like when we updated the resource reserves for ourselves. When we think information is material to our share price, we have an obligation to share that, and we take that seriously. So it's always a balance. We like to do things. Our first instinct is to always do them together and collectively with Newcrest, because I think that gives the most level of comfort when both joint venture partners are making announcements together. That remains our preference. It will always be our preference. I think we've been, largely very successful. And I think there's been a couple of questions that's gone to the relationship of Newcrest. Newcrest releases its exploration results quarterly. Now we do our cadence 6 weekly, so we fit 2 results in their quarterly period. They accommodate that. It's less material for them. They probably don't need to, but I think that's an example of where we announce but they don't, but it's done in a really cooperative way. And then it comes into the quarterly where we announce together. But again, it's a triumph of that joint venture relationship. So I think we can, when we need to, chart our own path, but also we like to do it cooperatively and with our JV partner.
Okay, you may well feel as though you've already answered this, but it is a pertinent question, so I'll let you be the judge of it. Graham Bryant, are you intending on producing, updating an MRE based upon the drill results as at the end of June, so that investors might be able to compare a bullish view of Havieron with a rather conservative view of Newcrest?
Look, we've updated it. I think Newcrest has, as I understand it, and I'm not don't come from Newcrest, obviously. I understand that they're going to update their resource on Havieron, unusually for them, I think in their annual report. So that will come out, I imagine, around the end of August. So that I expect we'll have a drill cutoff around the time of our own. So I think that then we fast forward to when is the next update, perhaps as part of that feasibility study. But again, the cutoff for that drill data, I think if we use the PFS as representative, their drill data cutoff from memory was the 1st of February for an October release. So that's, again, a reasonably slow burn. We'd like to update. We'd like to keep investors informed. I think the new normal cycle, which didn't apply this year with Newcrest, is to update in February. We'd like to have Havieron as part of that update and make sure that our shareholders get an updated view of that in February next year. That's inside a 12-month cycle, which I think is considered good practice. So I think those are probably the 2 points. Perhaps there's an interim update. There's possibly 3 updates. Newcrest has data coming out with their annual report. There's a feasibility study expected in the December quarter, and presumably at end of February kind of update, which hopefully the parties do together. So we do have a sequence of updates. And if Greatland again felt it was to our shareholders' interest and really incumbent upon us to update that ahead of time or with more updated numbers, we'll always consider that.
Okay. Back to the base metals. Dip Sard says, could you talk about nickel, please?
Yeah, look, that's, we think there's additional opportunity for these minerals there. We assay for it. It's not part of what we release.
Do you find it though? I think is what they're asking.
Yeah. Well, I think there's finding it, and there's finding it in
commercial volumes.
Yeah, commercial volumes. So that's something that we keep. I think as a Greatland team, we've got a little bit of a focus on. So yeah, I think potentially with that accelerated learning curve that we've had through this process, it does position us where we can, think through that and see if we can't knit that together. Our preference, if we were going to comment on that publicly, would be to do it with Newcrest. But if we feel we need to provide an update, I think, again, this is an opportunity where we think of things first with equally with the joint venture hat on and around our obligation to our shareholders. And we have an obligation under the market to release material information. We have an obligation to keep it informed. So, that's something that we try to understand. But we also have confidentiality agreements, which are, undertakings in the JVA. So there's a balance, there's a negotiated path that we try to apply. But, watch that space. It's certainly something that our geological team spends time, energy, and effort trying to understand.
Okay, and I'm going to ask the audience, would you like an extra 10 minutes to be added to the end? Because we're coming up to the last 3 or 4 minutes of the hour. I'm happy to sit here and keep asking. Well, I've certainly got sufficient good questions for another 10 minutes. One person say yes and we'll do more, okay? Keith Flanagan says, can you provide us with a full 3D visual of Havieron? He means, can you provide us with a form of video? And someone at the town hall meeting was also after the video. So a video, a 3D simulation, might that be possible in terms of your comms?
Yes. Look, Keith, good question. It's something we've thought about. Again, the accelerated curving, the accelerated cycle time that we've had, really pressed upon us, but to our enduring benefit. Means we have a really strong understanding of that database. So it is something we're looking into. What the final form and shape of that will be, time will tell. But yes, it's something under active consideration, and I think we're even kind of preparing the data for it. Whether it goes ahead or not, I think is depends on exactly what we think the product we can provide. But we are actually happen to be actively looking at that. So great question, Keith.
Okay, thank you. That was a very positive answer. Mr. I.A. Ripper, I'm not sure if that's a real name. Are you a real Mr. I.A. Ripper? Anyway, he asks a very sensible question about Ernest Giles. In the future, Shaun, do you see Ernest Giles as Greatland Gold's first 100% owned producing gold mine? Can't deny that's a good question.
Yeah, it's a lovely question. Look, I think I've been consistently open that I really value and think highly of that Ernest Giles ground. Archean greenstones are associated with a majority of West Australian gold discoveries. They are tightly held, heavily explored. We have one undercover, which is also, I think, competitive advantage in exploration for some with long memories. Newmont did have a look at that once upon a time. Pre me, my understanding is their Australian team advocated to bring that into a joint venture into Newmont. At some point, that didn't resonate with Newmont Denver in terms of their overall global portfolio. But I think it's again ground that even a major is interested in, and they had some proprietary tech that they shared with us around the opportunities there, and we're kind of itching to drill those. So and now kind of fast forwarding to today, with a larger balance sheet, larger market cap, and better access to capital, the way I interpret that is it makes more sense for us to take an asset up the value curve, i.e. to spend more on it to define it better. So if we were to transact on it, we'd get its full value. And to be even more open, yeah, look, absolutely love to bring 100% owned asset under production. So if we did discover the right rocks there at Ernest Giles, I'd be delighted to take that through to production. And my background are in producing entities, so itching to get there.
Now, I do apologize. A very sensible person asked a very sensible question. Would you actually buy your own rig and use it on some point? No, you didn't mention Ernest Giles, but it could be Ernest Giles on one of your tenements and actually get it into production. I mean, does that make economic sense? Or
Yeah, look,
does the industry work like that? Would you own
at
your own
some
rig?
points, yeah, no, look, at some points in the cycle, particularly at some of the larger companies I've previously worked at, we've looked at building our own rigs or owning our own rigs. Look, I think to do that, you'd really want to make sure that you had a very clear plan as to how you deploy them for a long time. Right now in the Patterson, you typically demobilize for 3-4 months a year around that real hot period. We don't so much do that at Havieron, although we actually did demobilize this year for a couple of months. But we've been going hard at it for about 2 years, and I think they just felt everyone needed a break, and some of those rigs needed a rebuild. But right now, we actually demobilise for a period of the year, so we wouldn't be efficient users of those capital of those rigs. If we did have full-year rig drill campaigns, I still don't think it would be our first step. One of the things I think we do is invest in relationships. It's been really hard to get rigs in Australia over the last few years. That hasn't been our problem. Some of those drill camp contractors, I've treated with respect in previous roles and have relationships. I think guys like Roger in our team have Roger Spears have beautiful relationships with a lot of those guys. And again, those relationships, the mutual respect, pay dividends when rigs are tight. That doesn't mean they give them to you free, but it does mean you get access to them even when they're under strong demand. So I think the culture of our organisation means we haven't had a difficulty getting rigs. That doesn't mean it's not hard, but we've been able to achieve that. So it's not the first thing I do, but it is an interesting concept. And I've certainly done the maths around optimising that and the beauty of doing it. But I think specialisation in rigs and the teams, having experienced drillers, maintaining those workforces are all reasons why, to be open with you, I think it makes more sense to use contract drillers.
Okay, good answer. Here you go, a slightly tricky one, a slightly personal one as well. James and Stuart Pratt ask, are the directors now able to purchase or sell shares, or are we still in a closed period?
I'd have to double check, because to be honest, it hasn't been this has been the focus, but I think we'd be out. So I think after a long period we're probably out now. So it's certainly something I know a number of people have been thinking about over the last 6 months. So again, it'd be inappropriate for me to give guidance on that other than say we're out. And I think previously we've said there would be times where people, including myself, would have liked to have bought shares had we had the opportunity to do so.
I have heard you say that, indeed. You said that last week. With apologies, I'm asking this in a slightly jumbly fashion, which annoys me because I like things to be structured and neat. So I do apologise. But we're back to Ernest Giles. You mentioned that in Newmont, all those years ago, had data for Ernest Giles. Someone's asking here, do you have access to that data? Which is a slightly curved, bally, tricky question for you, but presumably it'd be nice if you did.
Yeah, look, we do. A lot of that was shared with us, and certainly the outputs of that. So that went into, I guess, some long-standing drill plans that we have. We get, one of the nice things about not having access on an area is the geologists have lots of resonance time to really optimize where they want to drill. We've probably, we've had that in spades there at Ernest Giles. So when we do get access finally, I think it will be, we have some priority targets which are informed from, some really interesting discussions with Newmont and the own internal, and with the passage of times, those get further scrutiny, further refinement. So we're certainly kind of drill rig ready there.
Okay. Chris Kirk asks, have Newcrest recognised your upgraded MRE yet?
So they're coming out with their updated, and my understanding, I should say, of the Newcrest communications is that they're going to come out with an updated MRE or resource in with their financial statements, which I understand, although I have not verified, is end of August, which is kind of typical in Australia. So that's my expectation. But that's really a matter for Newcrest to decide. But I'm sharing you kind of my casual observations of what I think.
Fantastic, and very kind of you too. Ivan Armstrong asks, hello, Shaun, or he says, hello, Shaun, a very positive outcome, major hurdle passed, so big thumbs up there, well done. I recently read some speculation about you putting the Northern Star team back together. Can you comment, please?
Hi, Ivan, and thanks for the question. Look, I think if you went around my office, there's a few people in there I've worked with before. I've worked in 3 incredibly successful organisations across Straits, Sakari, and of course Northern Star. And one of the other companies I sit on just as a non-executive director. The MD there is the ex-technical head at Northern Star. So it's a lovely network, that group of Northern Star people. I remain in contact with a lot of them, and it's certainly a good Rolodex to bring in them, or to sound out from them high quality people that they can introduce and trust and respect. So yeah, I'm always a little bit sheepish to go back to places where I've worked and take people away. But equally, if people are looking or people express an interest in joining, that's a great, recruiting through word of mouth and relationships and knowledge, I think is fantastic. You get a much more certainty about the outcome. And again, if you look around our office, it could be close to 100% of people are kind of one step removed to one of us, not necessarily to me, but to one of us. And I think that's part of the reason we have a high quality team, a close knit team, and a good culture, and a team that's delivered. So it's certainly on my mind. And if we had the right asset to put into production, I think there's I've got a good Rolodex of people.
I noticed that you tweeted this morning in praise of that team, and last week you described them as high functioning. So there you go. That's twice you've praised them in a week. I mean, that's enough. Stop there, Shaun.
and Donald, I appreciate your praise of my gift work. Thank you very much.
I'm stunned that I actually remember the things that you say. Right, here we go. Jonathan Dixon. Shaun, thanks for stepping up the investor comms. Is the relationship with Newcrest remaining positive enough that if Greatland found another Havieron-style deposit on a sole tenement, you would go straight to them? Or would you open the door for a JV to all the other majors, Rio, for example?
Well, let me answer that in 3 parts. Well, firstly, and I've probably touched on this in some of the other questions, if we found something, we've got a bigger balance sheet, bigger access to capital, both equity and debt, where we perhaps don't need a partner. We perhaps keep that all for ourselves and develop our own 100% asset. And I think that went to the question about a network of Northern Star people from, I think, Ivan, and broader. So I think we have the capability and appetite to be a multi-asset, multi-billion-dollar platform. The second part of that question, look, the relationship with Newcrest is good. We respect them. They've got a magnificent plant up there in Telfer. It would almost be a crime to have to build another plant in the shadow of that. So naturally we would talk to them. We have a joint venture. I think what it would do is strategically give us an ability to bring that to the table and say, well, we're going to bring this in, but that gives us an ability to rebalance this. We wouldn't just bend it in for free. It would be, how can we make this a better merged outcome? Because we are now contributing additional assets to the JV. But we'd be delighted to do it with them. They're a great company, global major, and their capability is outstanding. But thirdly, competitive tension's really good. I think because we have a relationship, because we have organizational knowledge, because we have an understanding of their infrastructure, naturally Newcrest are really well positioned if we went down that path. But if someone else is able to kind of engage with us and provides a sensible alternative, that should only improve our outcome. So competition is good, competitive tension is good. So I think you can kind of have the best of all three worlds there. You can understand whether it's best to keep for ourselves and develop. We can leverage our existing relationship with Newcrest and the existing joint venture structure, or we can add competitive tension, and perhaps that other party provides a better solution. It is horses for courses. So all are on the table, and I think about it in terms of optimization of scenarios, not in terms of being pre-baked.
Fantastic. I'm going to draw a line there. That's an hour and 10 in. Thank you very much indeed for your patience, Shaun, and for your enthusiasm in answering all these different questions. Take a bow, folks. That was 500 of you have stayed for an hour and 10 minutes. And that's a fantastic stamina. You've obviously been enjoying it. Thank you so much. It was great to hear you talk, and it's great to hear such good news coming from Havieron. Well done, Shaun. Well done, senior team, and thank you so much to the audience for hanging in.
And if I can jump in, just to say thank you to you, Donald, and to London South East, but also for the 500 who stayed the whole time, but everyone's support, shareholders who got to listen in and participate for some or part, or it's certainly very stimulating for me. I enjoy committing this time. I enjoy the questions. I enjoy the transparency and the engagement. So thank you for the platform, and thanks for the engagement. Back to you, Donald. Thank you.
It's a pleasure. I'm sure everyone out there thinks this is all terribly well organized, and we've weeks and weeks to put these things together. But unfortunately, it isn't like that. This one has really been, we've had to wait for the announcement and then literally thrown it together. So it's fantastic, and it's testament to all of you for turning up, on the big day. Thank you so much. Thanks, everyone. Have a good day, and thanks for turning up. Bye-bye.